EM has a huge commodity cycle. When China was like building out infrastructures in the 2000s, right? Like you have huge like real estate boom, you have huge like railroads and highways, airports, all those build outs like creating a general commodity boom. Then in the 2015 to 2020, you have like a lot of emerging market build out their own technology and digital platforms like in China, in Southeast Asia, in South Korea. There's so many like internet companies like become like big platforms that dominate their domestic consumer market. Now you have a catalyst of a little bit of both, right? Like in a tech space.
So it's my birthday, and this year I'm celebrating by giving a special gift away to one of you. And to officially wish a happy my birthday to you, I've packed this tote with a few surprises from our signature Few Crew merch portfolio. And it's not just random merch. Inside you'll find some items that really quietly signal you know exactly what you're doing in these markets. And the tote, well, it won't hedge your portfolio, but it will make you look smarter than anyone pretending they know what risk on means at the grocery store. If you want it, here's what you need to do. Follow Lead Leg Report on X. Follow Mela_Schaefer on X. Subscribe to Lead Leg Media on YouTube and like and share this video. Only one person gets the tote, but since everyone gets our content, it's really a happy my birthday to all of you. I'm your host, Melanie Schaefer. Welcome to Lead Leg Live. Today, we're talking emerging markets, the dollar, and where AI exposure is really coming from right now, especially as U.S. leadership stays narrow and investors start looking harder at diversification. My guest today is Derek Yen, Senior Investment Strategist at KraneShares. Derek, it's great to have you back.
Thank you for having me today.
So to kick things off, U.S. equities have become increasingly concentrated in a handful of mega cap names. Is that creating a real opportunity, do you think, or for emerging markets right now? And how should investors think about diversification at this point in the cycle?
Yeah, I think that's kind of like a most important phenomenon right now, right? Like for investors, especially when everybody owns like S&P 500 or NASDAQ 100. If they check their top 10 holdings, now in S&P 500, that's like 35 to 40% concentrated in those 10 names. We have never seen that concentration level, at least over last 10 years. So that just means like our equity market benchmark is primarily driven just by a few names. Could be good, could be bad. But like just look at their earnings contribution, I think is lagging their market cap. So which means in the future, they have to deliver the earning growth. If it's not going to happen, then you do have some like issue. Now the valuation is kind of like expensive. So just like for investors, a natural thinking is really how to broadening the trade, right? Within the US or going international, like for international or emerging market, I think one of the benefit is just like they have a relatively lower valuation. So that's something like to really explore more opportunity. And often like EM is something offer like great diversification, some like lower correlation versus the US equity. So adding EM to the portfolio can benefit investor to that point.
Yeah, and you know, talking about fiat and currencies, the US dollar has been a headwind for emerging markets. Derek, if the dollar stabilizes or starts to weaken, how meaningful could that tailwind be for emerging market returns?
Yeah, I mean, like currency is kind of like the quiet killer for EM returns over the kind of like the past decade. Well, like currency, like for US dollar is still like the world reserve currency. So like dollar's been strong forever until I think like now Trump administration is taking a different approach. You heard from Mr. President that he likes the weakening dollar. He loves it. I think that's his intention, like to throw a trade war, like on the trade, it's like bring the manufacturing job back to US, which means you have to keep the dollar probably weaken. And you have like, I think, a new Fed chairs coming to willing to cut rates more. So all those like monetary setup or just like the government policy setup is really geared towards more weakening dollar going forward. So previously in look at like long term, the EM equities really benefited from like weakening dollar previously. So if we think the dollar is going to be continue to be weakening over the next say 2 to 3 years, I think EM is something worth looking at because the currency cycle.
Yeah, and I want to ask you a little bit about last year and looking into 2026. But I mean, emerging markets had a really strong 2025. When you look at 2026, are we still early in the multi-year cycle, or expectations sort of getting ahead of those fundamentals?
Yeah, I think like just like look at the diversification trade or broadening trade. It already happened a little bit last year, like in 2025. The EM outperformed US. I think like that didn't happen quite often, right? Like you look at like last 10 years. So a lot of investors, that could be just one off. But even after rally, the valuation, the comparative, like look like a forward PE of many EM indexes is still like low double digit compared to kind of like 20 to 30 for many US indexes. So EM is still cheap, right? So that's like good news. And I think like one way to look at the EM, you do have like this cycle, right? Like look at like 2000, I think like there's like a multi-year EM bull market just before the 2008 financial crisis. I think we're in a very similar situation here where the valuation is very cheap in the emerging market. And you do have fundamentals improving. You have like the earnings revisions getting better, especially around the technology side. You have this like global AI build out with a lot of key players actually exist in the emerging markets. You do have, I think like China is like one of the elephant in the room that they're building their own ecosystem in the AI. You do have all those catalysts, I think like in critical materials as well. So that's just like creating, I think, multi-year catalyst for the emerging market to outperform likely. So adding a little bit of EM to the portfolio, I assume many investors is really US focused, US centric. They don't even bother go international, but I think that's been right for, 10 years. So that's a long time, but like to really think strategically for the portfolio construction, adding international and EM, especially I think like geared towards like more specific flavor of EM is very important for investor this year.
Right. And there's obviously a connection between commodity exports and tech. But there's rotation that goes back and forth. In today's setup, which side looks more durable to you and why?
I think it's very interesting question because like it's it looks like the history, right? Like EM has a huge commodity cycle when China was like building out infrastructures in the 2000s, right? Like you have huge like real estate boom, you have huge like railroads and highways, airports, all those build outs like creating a general commodity boom. Then in the 2015 to 2020, you have like a lot of emerging market build out their own technology and digital platforms, like in China, in Southeast Asia, in South Korea. There's so many like internet companies like become like big platforms that dominate their domestic consumer market. So now you have a catalyst of a little bit of both, right? Like in a tech space, you do have like a big catalyst from like AI think about like the SK Hynix, the Taiwan Semiconductors, those names been doing great. For the commodity side, is less the general commodity, but more specific categories, including I think like powering the electricity or just like the grid upgrade, some like critical material. Those things are like facing in kind of like bottleneck for a lot of future technology development. So even some of the commodity become a technology relevant. So I think like this is kind of like a sustainable technology boom that some commodities going to be in demand because of that structural boom as well.
Yeah, and I mean, you spoke about it just now, but there's a relation between all of these different things involved in tech with the commodities. But then if we take it all, if we take a step back, I guess, and talk specifically about AI, I mean, people usually jump straight to US hyperscalers. Can you walk me through the emerging market role and in the AI value chain, and even the materials that support it? China's AI ecosystem is moving fast.
Yeah, I mean, like, look at like just the global semiconductor ecosystem, like where I think US is very like centric on the design, right? Like you have like NVIDIA, like you have all those like big like chip company doing the design, but like for a lot of EM companies, they do the manufacturing. It's like, I think TSMC is like, I think the famous one. Their chip manufacturing capability is way beyond the rest of the world, right? So I think they have a very critical packaging like technology called COBOS. Like they're like, I think those technologies really give them an edge, just being kind of like like monopoly in the chip manufacturing side, where now like China is catching up in a lot of those chip manufacturing. They're building their own chip manufacturers. So that's kind of like an ecosystem in Asia. Then on some of the semi part, right, especially on memory side, we talk about the HBM, which is critical for database in the US because the bottleneck is really the memory chips. So those memory chips, you have like big players like SK Hynix who dominated in this HBM memory chip, and they're kind of like the most important supplier to NVIDIA. So you have those very critical players that's like really global leaders out there in the EM countries. That I think if you just focus on the developed country or just focus on the US, you're missing out a big chunk of the opportunity happening in the AI picks and shovels.
Yeah, so as this all sort of takes shape, what does this mean for investors who are trying to size the opportunity, but also, be aware of the risk?
Yeah, I think like investors, they have kind of like a very heavy US-centric portfolio, right? And within that portfolio, they are very concentrated to the mega cap names. So I think like if investor can like trim down a little bit that position and looking for more diversified allocation, that could kind of like balance the alpha or balance the risk exposure a little bit. Going to international, going to the EM. Then for the EM, I think like technology part and the growth part is now kind of like is on a structural multi-year bull market, driven by the AI build out, driven by its own like consumer electronic, its own like digital economy upgrade. There's a lot of opportunity in the EM that's ready to take off because improving fundamentals, and it's relatively cheap in valuations. And as we said, the currency is probably going to be another big driver for the EM, especially the EM growth, as if Fed's going to cut rates and global central banks going to follow. Lower interest rate generally favors the growth equity, and especially the technology players who have like very big cash flow in the future. So if discount rate is lower, the valuation should be higher. So with all that, we think like the emerging market technology sectors probably is a good allocation for investors if they think diversifying from the current like mega cap centric US equity makes sense. And that could be their EM allocation and tilt towards the technology.
Yeah, so to be a little bit more specific now, for advisors who are looking at allocations, what differentiated exposure does KEMQ actually give them inside emerging markets, tech, and how would you think about its role in a modern global equity portfolio, Derek?
Yeah, so at KraneShares, we have a KraneShares Emerging Market Technology ETF. The ticker is KEMQ. So that really just like give you direct exposure to the emerging market technology exposures. So the fund includes in names like TSMC, SK Hynix, but also many other like digital internet companies that's really in China, in Southeast Asia. So I think like that exposure is quite concentrated but unique to really capture this weight of the broadening trade, especially around the EM growth, around the EM tech. So KEMQ, I think, is a good allocation for investors who are looking at very diversified exposure outside the US.
Yeah, and just to finish off, Derek, for anyone watching who wants to learn more, where's the best place for them to find KraneShares research and keep up with your work?
Yeah, investor can go to KraneShares.com. And for more specific fund details or just information on the KEMQ, people can go to KraneShares.com/KEMQ.
Awesome. Well, thanks so much for being here. And thanks to everyone for watching. Be sure to like, share, and subscribe for more episodes of Lead Leg Live.